and welcome everyone. Thank you for participating in today's webinar on the Paycheck Protection Program Loan Forgiveness. We're happy to have you here. I am Vice President of Membership and Development for the Small Business Association of Michigan. As you may know, we offer these webinars as a regular series, especially during this COVID crisis. We've been offering you webinars on a pretty regular basis. We have a couple next week that I'll tell you about at the end of today's program. I want to remind you to use the Q&A feature for questions that you have today. Please make sure your questions are focused on the PPP loan forgiveness. I know you may have questions on other topics, but I ask you to send those questions to sbam@sbam.org. Send any other questions again to sbam@sbam.org. If you would do that, we would be grateful. We will work hard to get through all of your questions today. We have over 1,000 attendees. So without further ado, I will get going. Let me introduce to you our two speakers. We're really appreciative of the two speakers that we have today. Thank you so much, Kevin and Sarah, for being here. Let me introduce Kevin. Kevin Rorigan is a shareholder, past president, and current executive committee member of the Loomis Law Firm. His practice focuses on commercial real estate litigation, primarily in the areas of business, oil and gas, tax and credit financing, affordable housing, municipal land use regulation, and employment law. Kevin has over 17 years of practice experience. He has been listed as one of the best lawyers in America since 2011. Welcome, Kevin. Very glad to have you. And also with us is Sarah Jennings, CPA, CFE, and a CAE. She's Director, Principal Accounting and Outsource Solutions, and Director of Strategic Initiatives and in Community Engagement for Maynard Costerison. She also heads up their fraud and forensic practice, and she's the Director of the Maynard Costerison Nonprofit Committee. Sarah oversees outsourced solution engagements, providing guidance and advisory services to client leadership and teams on financial analysis, projections, and workflow. She has particular specialization in performing fraud risk management and internal controls process improvement for organizations across various industries. I would also like to say that Maynard Costerison is a member partner of SBAM. They've done great work. They also happen to be our accountants, so great partner. But I will turn it over to both of you, Sarah and Kevin. Thank you again so much for being here today. And folks, if you would use the Q&A feature and not raise your hand, that would be great. All right, take it away, folks.
Thank you very much for having us, Lori.
Thank you.
We are excited to be here today, and I was telling Lori right at the beginning when we were kind of chatting beforehand, I forgot to put a little disclaimer on here. Every time we schedule one of these webinars and we say we're going to talk about forgiveness, we expect that we're going to get a bit more guidance and clarity around the whole forgiveness calculation. There are still some questions out there that Kevin and I will go over and kind of give our interpretations, the interpretations that we have to date. But the one thing that we know for sure is things are going to continue to change. So I applaud SBM, as I have in the past, for all of the proactive outreach that they've done. I think that that's a complete necessary thing right now because things are changing and moving so rapidly. But the goal, we've got probably 20, 25 minutes of kind of presentation type things. I do think we wanted to make sure that we could answer all the questions that you have. Obviously, within forgiveness, there's a whole host of things: employment law, unemployment, what are we going to do? So we're going to try to answer those questions as we go through. But as Lori said, certainly put them in the Q&A section and we will address them as best we can. Without further ado, Kevin, did you want to say anything else before we officially kick it off?
No, that's okay. Thank you, Sarah. I'm happy to be here. Looking forward to the questions and the presentation. As you said, with the disclaimer, we're all doing our best to have answers, but we're facing a constantly changing universe out there. So, you know, we've got to continue to look for the best guidance we can. So, but I know we've got a lot to get through, so let's go.
Absolutely. So we had talked about for weeks how to apply for the Paycheck Protection Program loan. Over 500 employees, it's 2.5 time, like monthly average of your salary, what you're supposed to be using it for. And now we're finally getting to talk about loan forgiveness because people are in there, they've started that 8-week period. So as I said earlier, there are things that are changing all the time, but overall amounts forgiven are canceled indebtedness. Now we will talk a little bit later of some of the at least more recent unknowns and more recent things that we're talking about, whether or not that's going to be taxable, whether some of these items are going to be taxable. 2 weeks ago, I would have, and I did say multiple times that this canceled debt, this forgiveness is not taxable. None of this should impact you negatively from a tax perspective. We'll talk about some of the new things that we're hearing and that are being debated in DC a little bit later. But in general, that's what it is. The amount of the loan should be used in the 8 weeks from the receipt of the proceeds. In a couple of slides, we'll go over some definitions because we get a lot of questions about what is the loan period, what is the covered period, what is an FTE, what is payroll. So we'll talk about that in a little bit. And the amounts are to pay for obligations. This is key, in effect on February 15th of 2020. So we need to make sure that you're not trying to get forgiveness on new phone contracts or on new benefits that you're giving to your employees. All of these things, the goal is that you are continuing operations, not creating all new things. Again, I've said this a million times, but the Paycheck Protection Program was enacted in order to keep operations going, in order to keep your people employed. And I know when Kevin talks a little bit more about employment law, some of the challenges that we're having with unemployment, things that are going back and forth, that's a key thing to keep in mind. The Paycheck Protection Program was intended to help people continue to get paid at their employer. So what we need when we talk about forgiveness, obviously from an accountant's perspective, we're checklist people. So we want to go through and say, what do you need to start gathering together or start tracking when you're trying to look at forgiveness? The first thing is gross payroll. So you want to make sure that you're gathering all of the gross payroll information by employee, by pay period. Healthcare costs for employees, contributions to qualified retirement plans. We'll talk about this and the timing of that in a little bit. Payments of state and local taxes that are based on compensations. That would be our state unemployment tax. Self-employment incomes of partners or owners who are operating as self-employed individuals. So again, the Paycheck Protection Program had the option for self-employed and 1099 contractors. They could submit a separate application. So these are things that those individuals would also need to be tracking. Similar information that you get together for your annual Schedule C, you're going to want to make sure that you have all of that documentation for the forgiveness calculation. Amounts paid on any leases, mortgages, or utility contracts that predate, again, that February 15th date. This is kind of, again, all of the things that you need to gather together as you're preparing to calculate your forgiveness and preparing to submit that to the bank. Because again, the forgiveness application is going to go to the bank. So a lot of financial institutions or credit union or whatever the lender is, a lot of financial institutions have already started handing out some calculators and some tools to help you. So certainly use those. But again, at the back of your mind, just keep in mind that that isn't a tried and true thing. There's still things from Treasury and SBA that are coming out. So what reductions should we expect for forgiveness? What reductions? So if all of the proceeds are used for allowable expenses in the 8-week period and your FTE count and compensation levels are maintained, then you shouldn't expect any. That's the goal. That was the big picture purpose for the loan forgiveness, right? As long as you maintain operations, you're not cutting people's pay, everything could be forgiven. But if and these are generalizations, we'll go into the details in a second. If your FTE counts during the covered period are lower than before, they're going to take a look and say, well, you didn't use the money for what I'm putting words in Treasury's mouth, but you didn't use the money for what we intended. We wanted you to keep your people employed. That's what the money was for. So they're going to say, maybe I need to reduce that forgiveness amount because you didn't use it for its intended purposes. Or wages are paid to employees that are less than 75%. And we'll talk about this a little bit later in detail as well, but this is only for those that are under $100,000. If you have an employee, because we know for the maximum loan amount, those over $100,000, the amount of their salary over $100,000 was thrown out for the calculation. So if somebody made $200,000 and you could only pay them $100,000, you're not going to get penalized for those individuals. It's just the ones that were under $100,000 to begin with. So that, again, the big picture point of the Paycheck Protection Program was to keep people employed so that they could still pay for what they needed to for their families, so that the Treasury, SBA, Washington doesn't want to see you, even if you maintain your FTEs. I'm going to maintain my FTEs, but I'm just not going to pay people very much because they're not really doing anything. Again, that's not the intent of the act either. So they're trying to say, keep things rolling, even if people aren't doing as much, even if they're not as productive and they don't have, they have too much capacity at this point, keep them paid. So again, those are kind of the two overlying rules to keep in the back of your mind when we're talking about the forgiveness. So again, I think it's really important to talk about some definitions, because there is a lot of questions that we field at our office. What is the covered period? Is there any wiggle room on when that 8 weeks starts? At this point, no, the 8 weeks starts when your loan is funded. We'll talk about a little bit later when we go through some of the Q&As, but is that period changing? There is some kind of rumblings that we've heard that it might be extended, but we're not sure. So today it is the 8 week period from when you receive the loan. We've had a lot of questions from people saying, well, today I'm okay. Should I wait to submit my loan application? Or I can survive. I don't want to do this until my next payroll, or like really trying to manipulate the timing, not manipulate in a bad way, but manipulate the timing. Our advice is if you think you really need this funding, this loan, and you can certify that you need the loan, don't wait, because as we saw with the first round of funding, you don't know if this is going to max out as well. So I wouldn't just hold on to your application and try to play the game of the full timing game. So that's just my 2 cents. That certainly is not a tried and true. There is some strategy in there, but I certainly wouldn't want to advise people to wait too long and then the funding's gone and you're just out of luck, because again, your application first goes through the financial institution and then it goes through SBA. The next thing is FTE. So what is a FTE? We throw that out a lot. All these acronyms get overwhelming sometimes. But that is referring to full-time equivalent. So when you did your Paycheck Protection Program application for the initial loan, they were just looking at how many employees, big picture. So one employee could be a part-time employee, it could be a full-time employee, it didn't matter. For the forgiveness calculation, they're looking at FTEs, and we believe they're going to go back to the ACA rules. So they're looking at a full-time equivalent. So this is somebody that's working at least on average 30 hours a week or 130 hours per month. This will be important when we talk about some of the FTE calculations a couple of slides from now, but just keep that in mind. It is a different measurement than when you submitted your first application for the loan. And then what is included in payroll costs? So one of the things that we'll talk about a little bit later is we've got the 75% threshold. We have to use most of it for payroll. Is that just payroll, or does that include health insurance, retirement, state and local taxes? It is gross wages. It is payroll and related is the payroll cost with what we believe that they're going to calculate for forgiveness. So again, just to get us all on a level playing field for some of the definitions. So then the first thing when we're looking at forgiveness, we've got our definitions down. Now we need to look at, okay, what are our covered period costs? Because ultimately, as I said, there are only certain things that you are supposed to be using this money for. So payroll, we talked about what is included in a payroll cost. Gross wages, when you're talking about gross wages, that does include employee taxes, because that's part of their gross wage, not their net, their gross. It includes health insurance premiums paid by the employer. It includes state and local employer taxes if they're based on compensation. It does not include, of course, like directors and officers insurance, liability insurance, things like that. 401k match, again, we'll talk about the timing of some of that information, because there still is the question, is that when incurred or is that when paid? So we'll talk about that in a little bit when we talk about things that we would still love to get a little bit more clarity. And then pension. All of this is in your 8-week covered period cost. This is allowable. Mortgage interest is another one. So again, we talked about earlier, it had to be in place as of February 15th. So if you recently got a mortgage, that wouldn't, within the last month or so, that wouldn't be something that would be included in this forgiveness. Lease payment. So if you have a rental or a obligation for rental facility that you're renting, that would be included. And then utilities. And we've gotten a lot of questions about utilities because there are traditional utilities that we all think of. Electricity, gas, water, phone, internet, it looks like will be included, but there is question, and we're looking for additional clarification. Right now, it looks like trash pickup can be part of utilities. And then in the act, it actually says transportation, which that I think is the most ambiguous kind of vague term they could have put in there. And that's probably the one we've gotten the most questions about. What is transportation? What does that mean? Right now, the interpretation that we've heard the most is fuel for business vehicles. So if you have vehicles that are leased or owned by your business, it's not mileage reimbursements for your employees, but fuel for business vehicles that we think right now, today, as of whatever today is, May 7th, days get foggy when you're working from home most of the time. As of May 7th, we think that can be included in the covered period costs. The next thing that we really need to look at is FTE data. So again, this is full-time equivalent data. So the FTE gets a little bit complex because there are so many different things that we're comparing. So right now, we know that we can gather data for the top two in this slide, so the comparison period. So what they're saying is you need to make sure that your FTE count isn't going down. So we say, okay, from what? So you can either use the period from February 15th of 2019 to 6/30/19. Again, part of that's for if you're a seasonal employee or something like that, you're not going to compare it to first quarter of this year when you weren't even open, right? You're going to compare it to something that's a little bit more comparable. Or you can compare it to January 1st of 20 through February 29th of 20. So what you're going to do is you're going to select the comparison period that has the lowest FTE count, because ultimately that's what you're trying to measure, right? That's what the act is saying. You want to maintain this level. So you can pick right now, it looks like you can pick which one of those periods you're going to use. Then they threw in this rehire period. So both of those things, I think we have the data, we can get the schedules going. So these are things that you can do now, even though we still have unknowns in the forgiveness calculation. Then they say there's this rehire period. Well, if you laid off people and you laid them off between February 15th and April 26th, that's kind of your rehire period. If you rehire them, then they can be considered in employment for the whole period, as long as you do it by June 30th. So that there's this other thing that they just kind of threw in the middle that has caused more confusion, I think, than anything else. But that's another period to make sure we're looking at those FTE counts, knowing what your employee counts, are for that period. So again, this is data that we can begin to accumulate by pay period now. And then we have to look at the FTE counts for the covered period. So that, again, as I said earlier, the covered period is the 8 weeks beginning when the loan is funded. So you're going to start looking at those, at the FTE counts. What we're looking at is the FTEs on a pay period basis, and then we're taking the monthly averages, right? So every single pay period, if you can imagine, I didn't put an Excel spreadsheet in here because it's a pretty massive spreadsheet, and I did not think that we could visually do it here. We're happy to work with you on the side, but you are listing out every pay period, whether you're weekly, bi-weekly, semi-monthly, or monthly payer, listing them out and putting in the number of full-time equivalents in how we usually recommend, you kind of have a column for full-time equivalents that are standard. They're always 1 FTE. And then if you have any part-time or variable hours employees, then you can put their average hours, or their actual hours rather, for that pay period in the next column. So that helps you to calculate out what your average FTE is. Again, it's a bit of a cumbersome process, but big picture, you're trying to make sure your FTE counts remain consistent. And again, they're looking at FTE increases when you're looking at the rehire period, FTE increases from the April 26th date through June 30th. So then when we look at the FTE calculations, again, as I said, if you kind of close your eyes and envision an Excel spreadsheet, which what else would you want to do on a Thursday morning? You are looking at your pay period. So you need to make sure you've got your payroll calendar. You look at your pay periods that you have. You look at the paid dates that they're being paid. You look at the full-time equivalents of the average full-time people. You look at the average hours of those non-full-time, part-time, variable hour people. And at the end of the day, we're going to calculate on average how many FTEs you have for each pay period. So then we can take an average of how many you have per month. You're going to do that for each of the periods that we outlined. So again, that's the comparison period for last year or this year, between February and June of last year, or between January and February of this year. You're going to look at that same data for the rehire period, February to April of this year. And then you're going to begin to fill out that same information as you go through your covered period, the 8 weeks from when you were funded, your loan was funded. And then again, we calculate averages for each period. The goal is to make sure your averages are relatively consistent again. So when you look at the total average, the average of the average is really what you're getting down to for each one of those periods. You take your comparison periods, pick the lowest one, and then you look at your current period. And if you're the same, you're in good shape. If not, there might be some forgiveness. If you've gone down significantly, there might be a reduction in your forgiveness. I'm certain there's going to be additional questions on that, so we're happy to answer that. The other thing that can reduce your forgiveness calculation, there's two different things that we need to look at. So the first one is the act says that you can't reduce somebody's salary more than 75%, or to 75% of what it was, more than 25%. And again, as I said earlier, this is for those who are paid under $100,000. So we're looking at Q1, first quarter, for those people who don't, I would look at 2019, see who didn't make $100,000, look at those people's first quarter of 2020, compare what you're paying them. And again, you're looking for 8-week periods, so it does take a little bit of a calculation, but you want to make sure that you're not reducing their rate and their salary by more than 25%. That's the first thing. And if you do, that can reduce your total forgiveness amount. The other thing that you need to take a look at, and this is kind of the overarching thing at the end, look at the total funds used. So again, we said that you could use it for payroll costs during the 8-week period, mortgage payments, rent, utilities. If all of those if payroll cost is not 75% of those 4 things, then it can reduce your forgiveness amount as well. So again, first thing, make sure you're using it for allowable costs. Then we're going to look at FTEs. We're trying to maintain our FTE counts. Then we're going to look at wages, because the goal is that we keep our people paid, especially those under $100,000, keep them paid at close to what their normal range is. And then we look to make sure that in total, we've spent that money on payroll cost, 75% on payroll cost. So again, it's kind of a 4 to 8 part process to look at the forgiveness calculation at this point. There are still a lot of questions out there. Like I said, we're still looking at clarity on the transportation piece. We're still looking for clarity on whether it's incurred versus paid. When we talk about payroll cost, we need to make sure then when we're looking at retirement contributions and things like that, there's a lot of speculation out there whether the retirement cost is whatever we pay, or whether we have to average it out and say, well, 8/52, because 8 weeks out of 1 year would be this percentage of our annual retirement contribution. So we're still waiting on some clarity for some of those things, but big picture calculation, this is where it stands. And Kevin, you are up. Kevin, I think you're still muted.
Sorry, thank you. Sorry, still getting used to this. Okay, so just want to briefly talk on about some employment law issues and how they can impact PPP and loan forgiveness issues. First of all, is the concept of furlough versus layoff. These aren't terms that have exactly precise definitions, but generally speaking, the difference between a furlough and a layoff and how it can have an impact on PPP is that a furlough is a temporary leave of absence is a way that you can think of it, that has a specific ending date, and you're fully anticipating and expecting that somebody who's on a furlough is going to be returning to work at a certain point in time. Whereas the concept of layoff tends to be more permanent, that if somebody's laid off, they are permanently released from employment. That doesn't preclude the possibility that you might rehire them some distant point in the future, at some point in the future, but that's just not either anticipated or expected in a layoff situation. So those are two competing concepts. Now, how that can impact the payroll protection loan forgiveness is, in for example, in a furlough situation, if you have a specific date that you think you can bring employees back to work, that can impact your FTE count, as Sarah was talking about, because if there are people that you have sent home and are not part of your workforce now, but you want to make sure that you can bring them back by June 30th in order to be able to include them in your FTE count, so that doesn't negatively impact your forgiveness calculations. Now, obviously, somebody that is either on a furlough or a layoff, if you're not actually paying them during the 8-week period following the disbursement of loan proceeds, you're not going to be able to, there's not going to be any money to count for forgiveness. So that's one aspect to that issue, but at the same time, even if you're not paying somebody or part of your workforce due to economic considerations, you still have to worry about the FTE counts, which is sort of a separate moving part. And so that's an issue to think about. The other issue with somebody that's on furlough, or this could apply to a layoff as well, you still can be paying continuing benefits such as health insurance and things like that. All of the major insurers in Michigan, Blue Cross, PHP, everybody else, those healthcare insurers have indicated and have said that during this time that they are going to waive any hours worked requirements for continued eligibility. The only thing they're going to be concerned about is that the premiums continue to keep getting paid. So you could have employees that are on furlough or on layoff, and you could, if you're still paying their health insurance premiums, you can continue. That provides obviously an added benefit for the employees, but it also would allow you to include those health insurance costs as part of your loan forgiveness. So that would apply to other benefit plans as well, that you might that have a cost component and that you might continue even though employees are on furlough or on layoff. Unemployment, and I'm sure that there's obviously record numbers of people are on unemployment. Who qualifies for unemployment? Generally speaking, unemployment applies for anyone who is either out of work or is working and getting paid less than they did in the past. So it can apply to people that are completely laid off. It can apply to people that have had hours reductions or salary reductions. Those people can apply for unemployment. Generally, in the quote unquote normal world, the state unemployment system has specific criteria. You have to have a specific amount of work history in order to qualify for unemployment. You also have to have earned a specific minimum amount over the last 18 months in order to qualify for unemployment. Those requirements have been relaxed during the COVID crisis, and so they have expanded the eligibility qualifications for unemployment. So a lot more people can get unemployment compensation than used to be able to. In addition, because of the federal stimulus money that's gone into it through the CARES Act, the amount of unemployment benefits that people can get is a lot higher than it used to be. The state weekly benefit amount in Michigan is $362, but the federal government has added $600 a week on top of that. So you've got a potential for people to be making, significant amount of money on a weekly basis due to unemployment. That has led to a situation that I get, a question that I get a lot from my clients is, what do I do if people that I recall or want to come back to work and they refuse to come back to work, either because they feel like they're getting a better deal from unemployment or for whatever various reasons. A lot of people talk about being afraid to come back to work because of health concerns. How does that impact your PPP? Because you're trying to get loan forgiveness by bringing these people back to work and they're refusing to come back to work. The SBA has given some guidance on this that I think is worthwhile and worth knowing. The SBA has said that employees who turn down a written offer of rehire, that the SBA will not include those employees, in other words, from loan forgiveness reduction. So that is specific guidance that has come out from SBA, so that if you are sending out written offers of rehire to people and they turn it down for whatever reason, then that will not count against you in terms of loan forgiveness reduction. So that's an important guidance from SBA. It's also worth knowing, and because I think maybe a lot of our employees don't think this through, somebody that turns down an offer to come back to work because they feel like they're getting a better deal through unemployment, at that point, once they turn down that offer of rehire, they're not really eligible to continue receiving unemployment. One of the criteria for getting unemployment is that you don't have any outstanding offers of work, or you don't have a job to go back to. If you turn down an offer of rehire, even if it's for less money than you're making on unemployment, you're no longer eligible for unemployment. And if that was contested or those facts are made known to the state, they will disqualify that person from unemployment. So people need to factor that into their decisions, that, you can't just turn down a legitimate offer of work because you want to continue making more money on unemployment. It doesn't work that way. The same thing with people that are saying that they're afraid to come back to work because of safety concerns. Now, if those safety concerns are legitimate, then it's possible they could qualify to get unemployment in that scenario, but they really have to prove that the employer is not following all of the CDC and OSHA guidances and criteria for having a healthy workspace. And unless they can do that, they're probably going to be considered a voluntary quit and not eligible for unemployment benefits. The burden is on the employee in that situation to prove that it's something attributable to the employer. So that's a good reason to make sure that you're following those guidances and suggestions from OSHA and the CDC. And it's also good for people to know that, they're not, just because you're afraid of coming back to work or you're afraid of COVID, that the current statutes that are out there don't really protect that situation, as long as your employer is doing what they need to do. Those are really the major employment law impacts on payroll protection. I think there are probably a lot of other ways that employment law impacts it, but I do see that we have just a ton of questions out there. I want to make sure we have plenty of time to get to those questions. So that's really all I wanted to say at this point. I think unless Sarah, you have anything else you want to add, I'm happy to throw this open to questioning, or we can talk about, yeah, I forgot you had that last slide, that we can talk about what if I can't use the money as well. And I'll just chime in right here with my thoughts on it. As far as what I have seen and what I have advised my clients, if you can't use all of the PPP money, if you can't get 100% loan forgiveness with what you're doing, I think you have to look and see what that amount is and how does that impact your operations. To me, my thought is this: if you can't use it, then it converts to a loan that you don't have to start paying back. I think, I could be wrong on the date, but it's not for quite some time. It may not be until January of next year. And it's a 1% loan, which is a better deal than you're going to get from any bank or any credit union right now. I personally, I would not be, if in that situation, I wouldn't be afraid of taking a 1% loan that I don't have to start paying back until January. So if you're comfortable with that, then you can do that. I think otherwise, then you can, if you can't use it, then if you're not comfortable with those kinds of terms, or you're not comfortable with taking on that kind of debt, then I think there are options to turn the money in as well. And I'll let Sarah address that.
Yeah, absolutely. Thank you. Yeah, I hijacked and I threw out the first question to you. So
that's okay.
Yeah, so absolutely. I completely agree. We've gotten a lot of questions on this issue, especially in recent weeks, actually, when people are paying back the money because they shouldn't. Publicly traded companies. SBA has issued guidance that if you don't need the money, and I'm actually going to read, because the application form says current economic uncertainty makes this loan request necessary to support ongoing operations. So if you can still certify that that is the case and there is economic uncertainty, I would absolutely agree with you that, I mean, it's uncertain to everybody right now. A couple things, we have had some questions that I don't know is there's a lot of great answers out there, unfortunately, but we have had questions. Well, what if I could get a line of credit, but I have the Paycheck Protection Program loan? Should I pay it back or not? And I think that's a great question to, talk with your trusted advisor, because everybody's situation is a little bit different. Definitely look at that. But one thing I would go back to current economic uncertainty. It's not done being uncertain. We don't know what the next 6 months, 12 months is going to look like. So I would definitely take a look at that. And then we were chatting a little bit earlier. The SBA has also said that they are going to do some checking on the applications to make sure that the right people are getting the money. They have stated, I believe, over $2 million is kind of their threshold, and then selected others, whatever that means. So they're really just leaving it open. If there are others that we want to take a look at to make sure people are, the right people are getting it, the people that really need it are getting it, they have the purview to go in and look at those records. But absolutely, we had been recommending to our clients, it is a 1% loan over 2 years, no payments or interest for 6 months. Who would say no to that, especially a month ago when we didn't know it was going to happen? And I think, today there's still a ton of economic uncertainty. So I would agree. The one thing that we are recommending to clients is, because I don't think that they've said, if you are tracking this pot of money, regardless of whether or not you're getting it forgiven. So say it's not forgiven because you couldn't use it in that 8-week period. Will there be penalties if you use it for non-allowable purposes? So if you say, well, I really am going to take this time to upgrade my facility and use the cash to do that, are you going to be penalized for that? We're recommending stick to the reason that you got the loan, because you are required to keep track of how you're using those funds. And I don't think we've gotten a lot of clarity on whether or not there will be penalties for misuse like that.
All right. Well, thank you. You are correct. We have over 330 questions rolling along the screen. I can bulk a few of them together. The first one is, folks are asking about qualified expenses. There was landlines, cell phones, IT, software, vehicles, like fleet vehicles, company paid cars. Can those type of things be included as forgivable expenses?
So again, that's back to the ambiguous utilities. What's in utilities? So yes, telephone. It looks like yes, cell phone. Yes, internet. Software, I'm not sure that's going to qualify. You said IT, I believe. I think it's going to, if you're talking about the network costs, that might be. But if you're talking about like a maintenance agreement for IT support, I don't think that's going to
Cable.
be.
Somebody asked about it, cable, like your
Yep.
Wi-Fi.
Cable probably is going to be included. Yep.
Okay.
And the other one is, you said was, fleet vehicles and things like that. So again, that's the transportation. Right now, it sounds like it is going to be fuel for business vehicles. But I think that we'd love to have a clear, concise answer on that too.
Right. Right. And keep in mind, folks, we do keep posting. There's FAQs that the SBA keeps releasing as these questions get asked. They are creating FAQs, and I think they're up to 45 or something. The last one came out, the latest came out yesterday, and we are posting those on the site. So some of these gray areas that people are asking questions, eventually they rule, and they do put it out there. It's in the document that is on the website. There were several questions in here about taxes, and I'll dig those out. But the other big chunk I think we can take is the FTEs. A lot of folks on today's program didn't know what an FTE is. It's a full-time employee. It's my understanding, usually when we take a full-time employee, we take 2 part-time and they equal 1 FTE. It's my understanding in the PPP, they don't ask about FTE, they're asking about number of employees only. So if you have a full-time and 1 part-time, they equal 2. Is that correct?
So for the application of the loan, correct. When you're calculating forgiveness, that's not correct. And now they are looking at full-time equivalents. And that is anybody working on average over 30 hours or more. So again, it's 2 different measurements, unfortunately.
Right. But you won't be hurt if you say you have 5 employees and only 1 is full-time when you go to, so I think that takes care of a lot of those questions that people had in here. So let's just start going through some of these right at the top. There's also another big group. A lot of restaurants are on here. They got the PPP. They're not open. What happens to them? They're not able to pay employees. They don't have staff right now. What do they do?
Yeah, that's a great question. I think one of the things is in looking at that is in thinking about what is the purpose of this program, and the purpose of the program is to give employers and business owners funds that they can use to continue paying people throughout this period of time. So I think the intent of Congress in providing these funds is that for example, to a restaurant owner, okay, you cannot be open or can only be open in a very limited way right now. So a lot of your staff may be at home, but here's some money that even though they aren't working, maybe you want to pay them anyway, because it's a benefit to the employee to get the money, obviously. And essentially from the government is saying, if you use this money to pay your folks, it's basically free money, because we'll forgive the loan and you're not going to have to pay taxes on the loan amount. It's not going to be treated as income to your business. So that I think is one option. I think that's probably the option that the government has in mind, is that even people that aren't working for whatever reason, that you're still going to pay them anyway.
Yeah, and that is, when the law was enacted, when the CARES Act was passed, I don't think there was a realization that it was going to extend, the period was going to be as long as it was. And that's why they had done 8 weeks. And that's why now we're hearing rumors about it being longer, but that has to be legislative and passed down to the SBA. So we're still working with 8 weeks. There is a potential, but you're absolutely right. That was the impetus behind it, is that it would keep people employed, but it obviously has gone longer than perhaps was anticipated right at the start. Okay, let's find a few more questions here. Once the 8-week period is over, if a covered employee is then let go on unemployment, does that impact forgiveness?
I don't think that there's any look back right now. I don't think that they'd have any place to say that unless they're going to give you more money.
Okay.
Right.
Need to keep them on.
Yeah, I agree with that. The only way it could potentially is if your 8-week period ends before June 30th, and then you let somebody go then at that point, and they're not there. That might impact your calculation of how many full-time equivalents you have versus last year in terms of. So that's a potential, but I think that's going to be a pretty fact-specific situation right there. But generally, right, there's no look back at all.
Great. I have several questions that relate around if I hire a family member, or if family is getting draws, or if I'm getting owner draw. How does that work with PPP? Do you have to show a paycheck?
Well, I think some of the financial institutions are going to determine what support they need. Whether it's an Excel spreadsheet, they're probably going to ask for your payroll records. If it's a draw and it doesn't go through a normal payroll system, they're probably going to want to see check stubs or something like that. I would caution people from hiring their family members just so they can use up the PPP money, because that isn't the intent of the loan unless it's a family business and the family members have worked there. But like if I go out and I hire all my cousins to my CPA firm and they don't know what a tax return looks like, that probably isn't what I should be doing.
Right. Yeah, that's not the faith of the law. But again, if you're an owner taking a draw, are you able to include yourself on payroll? What kind of documentation do you need? I've heard owners taking monies out. If they don't have a W-4 at the end of the year, is that allowable?
Right. So if they're not getting like W-2 money,
a W-2.
Normal paycheck or something like that, but if they, at the end of the year, they're part of the ownership and they get a K-1 that says they have guaranteed payments and it's going out through that realm, yes, that can be included under the organizational payroll. Or if they have on their K-1, again, there's another box that says self-employment income. That is also included in the Paycheck Protection Program. Kind of on the flip side, so as the self-employed individuals also can apply if they don't fall under the other side, then they would have to look at kind of, again, a mock Schedule C is what we're really recommending. Look at what your normal operations would be. It's probably going to be 850 seconds of that.
Okay.
Right.
And then
the other thing to keep in mind, on owner draws, I agree. I think they're included, is that you are limited to that $100,000 annualized amount. So you can't draw out an unlimited amount of money in order to get loan forgiveness. You'll only get forgiveness on the first $100,000.
Okay. A few more questions here regarding if I add on additional employees, so if my numbers go up, can I include those? And a couple of people would like to give hazard pay or bonus to existing employees. Would that be allowable?
Go ahead, Kevin, you can go first.
Yeah, well, yes, definitely. The SBA has specifically endorsed giving people hazard pay if they're currently working during the crisis. I think you should, and bonuses I think are allowable too. I think you need to be judicious in your application of those things and not make it an unreasonable amount. But those are additional compensation factors that are specifically endorsed. If for example, with the bonus, one way metric that you might want to look at it, and Sarah probably has a lot better ideas as well, but if you think about what do I normally give somebody as a bonus at the end of the year, that's typical, and then sort of think about 850 seconds worth of whatever that amount is. And I think that if you do it that way, that's going to be seen as a reasonable bonus for somebody during this period of time.
So not the entire bonus, but the 8 weeks portion is what you would. Yeah.
I think that would be a prudent way to handle it. Yeah.
Yep, I think so too. But I mean, it does go back to the conversation of incurred versus paid. So I think that's where we're going back to. The conservative approach is saying 850 seconds. I have some clients that their year end, their fiscal year end is April 30th, and they always give their annual bonuses right now. Well, they just got their paycheck protection program. The annual bonuses were included on the application for their average monthly payroll. So they're kind of in a pickle. Can I pay my normal, or do I have to take 850 seconds? And I think we're still waiting for guidance on that. The other consideration, and this is really a owner by owner kind of consideration that I've heard, is when you're doing a hazard rate versus a bonus for a hazard bonus. Obviously, those are two different things. One's increasing the rate versus one is a one-time bonus. There have been some advisors, I'm not necessarily saying that I am one, I think it has its time and place, but some advisors that have been advising of doing the rate as opposed to the bonus because they don't want the appearance of giving somebody a bonus that bumps them over the 850 seconds of $100,000, which is only $1,900. So if you had one check that's $2,000 for somebody, and then the bank sees it or your lender sees it and they say, well, wait a minute, that person is now over an average $100,000 person, they're worried that that'll throw them out. I don't think that it's going to go that way, but just some financial institutions are absolutely saying that. The other thing that I've heard a lot of business owners concerned about, if they do a rate increase, when is it no longer hazardous? So we get this paycheck protection program for 8 weeks. If I give them a rate for hazard pay, it's going to be a hazardous working condition. We're not done with coronavirus for years, you know? So does that mean this hazard rate continues on, or how, once you've increased pay, how do you go back? So things to think about.
That's great. Okay, a few questions on health insurance costs. We know they can be included. The question is it the employer portion only? Can you include the employee portion that they would pay? And could you put the whole year in? We know the answer is no. It has to be only for that time frame. But is it just the employer portion?
So it's the total premium. Again, going back to the first area of payroll cost, it's gross payroll. So the employee portion is actually included in that gross payroll. So you can't include your health premium total payment and gross. You'd have to reduce the employee portion from the gross and then include it. Overall, yes, is the answer. You just have to be careful you don't include the employee portion in two different spots.
Count it twice. Yeah, right.
Okay. Question on the 25%. Someone said that it can be used for mortgage interest, not principal, but I guess the slides say mortgage.
Interest, correct. It is interest. Yep.
Mortgage interest. Okay.
Yep.
Can you include FSA or HSA costs? FSA would be paid by the employees, so that would be no.
Right. It would be potentially in their gross payroll. So I mean, from that perspective, it would be included. HSA, if it's under the health plan, I haven't read that there's a lot of clarity on that. I think part of it, look back at what was approved in your application. If you included it in the application side and it went through, I would assume, and again, this is a big assumption, that the financial institution is going to follow that same line. If they approved it in one place, they're going to approve it in the forgiveness side too.
And so just to be clear, there's also a couple questions. Folks don't sound like they're aware of how you report this back. You're reporting this back through your lender. So a couple people have been asking that. So once your lender looks at it, then you'll know based on their review if it's all forgivable or what part isn't. Is that correct?
Yep, that's right. The law states that the lenders have to gather the data from the loan recipients, and then your lender has to certify to the SBA what the forgiveness amount is for each loan. So yeah, it's really important, I think, to as you're working through this and planning what forgiveness amounts you're going to be looking at, you should work with your lender first and foremost, because they're the ones that are going to be making the yes or no decision on your certification.
Okay. There's been some talk about, and this isn't one of the FAQs, if you get the EIDL advance and you have the PPP, that advance amount will be counted against your PPP. Can you explain that? We have a couple questions here on that.
So there is a lot of unclarity around that as well. So if you received the EIDL advance, which more and more people are actually getting now, it was a clog. So 2 weeks ago, this wasn't even an issue because nobody actually received the funds, maybe 3 weeks. But now people have. So now what we're hearing is if you use that EIDL funding, because that's a much broader based grant. So that can be used for operations up to $10,000. It can be used for operations. It can be used for way more than Paycheck Protection Program. If you do not use that for payroll and related and things that you're getting your Paycheck Protection Program loan forgiven for, then it shouldn't impact it. It shouldn't. If you're using that to pay your employees, then it'll be reduced from your total forgiveness.
Okay. And Kevin, you and I talked about this one earlier. Someone has heard that the IRS is now saying the expenses associated with the loan forgiveness will not be deductible.
Yeah, unfortunately, I think it's unfortunate, but unfortunately, the IRS is taking that position, so that the whatever payroll expenses, for example, that you count toward loan forgiveness, then those are not going to be deductible expenses when you go to fill out your tax return at the end of the year. That I think that the reason I say it's unfortunate is that that's gonna, if that holds, that's going to result in a lot of people probably having a larger tax liability at the end of the year because they're going to have a significant amount of expenses that weren't previously deductible. So that's going to increase their taxable income on the bottom line. I have heard and read that some folks in Congress are not happy that the IRS is taking that position, and Congress can pass legislation to overrule the IRS. They just have to do that. We'll have to see how that plays out, but for the moment, that is the position the IRS is taking.
Okay. All right. A couple more questions here. Let me look through them. Taxes. A couple were asking about, can you include FICA? Can you include state taxes in your payroll?
So state, yes, employee and employer, state and local taxes that are based on compensation. The employer share of federal taxes, no, you cannot include that.
And then a couple bulk questions. If an employee dies, if somebody retires, if they refuse to come to work, are those counted against you in your numbers?
Yes. Yep. Okay. It doesn't really matter. Again, they're looking at FTE counts. So they, right. I've actually been asked this question. So my interpretation, and I'm not alone in this interpretation, but the act isn't saying forgiveness is based on Sally or Joe being paid for the 8 weeks because they were employed a week or a month before when you applied. It's based on FTE count. So I don't care if it's Sally or Joe, the FTE counts need to maintain.
Just the number.
Right. The only exception that I've seen to that is people that, as I was saying before, people that refuse to come back to work.
Right.
If you've got employees that you've given it, and it specifically says a written offer of rehire, so make sure that you're putting those offers in writing for documentation purposes. But if an employee refuses to come back to work, then the SBA said they're not going to count that against your loan forgiveness.
Great. Good. Thank you. We have, folks, over 464 questions, so we will not get through all of them, obviously, today. What I ask you to do, if we didn't answer your question, please send it to sbam@sbam.org. That's SBAM@sbam.org. There's another question on premium costs for dental, limited liability, owner's business insurance. Can you include those costs in payroll?
I believe dental will be included in like the overall health insurance. Yep.
Mm-hmm.
Can you include lease equipment such as photocopiers as overhead?
What we've seen is that one, I think it's a little bit gray, but to be conservative, I wouldn't include it today, the equipment leases. Now, if you, Kevin, do you have a different approach?
No, I agree with you. I agree with you on that. Yep.
Okay. And I think we already talked about FICA being included. Is that correct?
Mm-hmm.
All right.
Employee,
just not the employer
not
portion.
employer, no employer. Yep.
Not the employer portion. So great. I think that is a common theme throughout this. So thank you again, Sarah and Kevin. We really appreciate this. Attendees, the slides will be sent out. We'll have the slides and the video recording. We'll send you a link later today. They'll be posted on the SBAM website. And we will do our best to answer all of your questions after this. I know we didn't get through them all today. So thank you, Kevin and Sarah. I can't appreciate it enough. Thank you for everyone that joined. Hey, we're all in this together and we'll keep working on it. If things change, which they probably will, we'll get you more information out. But do look at the FAQs, the PPPs. It's in the COVID section on the SBAM website under loans. Before we wrap, I wanted to tell you about 2 webinars we have next week. We have one on Tuesday called Basic Introduction to Cleaning and Disinfecting Your Business Before Opening. That's going to tell you how to clean your business, keep it clean when you open. And then on Thursday, we are doing one that identifies how to keep your employees safe once they come back. And we're doing it in concert with the Michigan Osteopathic Association. So we have some great medical professionals giving advice. That's Tuesday and Thursday next week at 10 o'clock. So make sure you take a look. So again, thank you, folks. I really appreciate you being on. And everyone have a good day. All right. Thanks, guys.
Thank you.
Bye.
Take care. Everybody be safe.